Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hello, hi guys, welcome again to the channel. For those of you who are new to the channel, welcome aboard. This is where we talk about market profile. Now I show you all the techniques, all the strategies that I use to trade market profile. Now I know, of course, there are a lot of trading ideas, trading systems out there, but the one thing that we want to bear in mind when we think about market profile is that it is the predominant tool that is used by institutions today, right? So a large portion of hedge funds, proprietary trading firms, specifically ones in futures, of course, use market profile, and there's a reason for that. It still has an edge. Now, a lot of traders can't see the statistical benchmarks in the marketplace. They don't understand when the profile is shaping up and when bids are stacking. They can't see what a value trade is. They can't trade balances. They have no idea what's going on. They're still focused on using the old methods that we know don't work. Now, of course, I'm going to talk you through the assets I'm in. I put my P&L up on the screen so you can see, and I show traders that you don't have to trade big to make money. You just have to have a structure in terms of how you run your trading business. Now, of course, for those of you who've been watching the channel, you know that I sell options, right? So I sell option premium, and that gives me a more steady income week to week. That means that I can focus, not over leverage on my leverage assets, so my CFDs that I trade. And that means that any gains that I make from that on a week to week basis might not be outsized relative to my option selling, but it all adds up and it comes together. You put it together, it's a decent revenue stream that you get from your trading business. So trading is not just about, just looking at one thing maybe. Yes, you can do that too, right? It's important to kind of ground yourself. Maybe pick 1 or 2 assets that you specifically look at, that's fine. But you need to have a framework for taking trades. You need to have a framework for managing losses, and you need to have a framework for determining risk. And it doesn't have to be complicated. And the great thing about market profile is that you can see everything from one viewfinder. So you can trade the short term, the long term, all in the same view. So that's the end of all the top downing, right? Starting from the monthly, then going into the weekly, and then into the daily. It's a long journey. I can have my weekly profile up here and I can see key levels where the market's going to turn around, and then I can act on that. And you'll see that for my portfolio. I can balance my risk, and I manage that very well by taking the information that the profile is giving me. It allows me to diversify into a set of assets, which means that I can capture the volatility in different asset classes, even if I am technically short and long the same asset, right? Maybe against another one, I can still capture the volatility because I understand the statistical benchmarks. And I'm going to show you some examples of how we do this, right? So you start to get the picture. So if you're out there and you're struggling and you've been doing the same old methods and it's not working, then I guess, the definition of insanity is doing the same thing over and over again and expecting a different result, right? So, Aussie dollar. Now, we spoke about this. Now, I was looking for us to fill the gap. We didn't. We traded lower. So this was an asset I was long in. I had to cut that. But one thing I did say to you guys was that we're going to trade into the bid stack, right? Pay attention to the bid stack. You can see I've got my support lines there, and that's from the prior video as well. You can see I say if we hit the bid stack, it becomes a great buy opportunity. I'm structurally bullish on the Aussie. And that's the other thing, guys. You need to be able to build a macro structure so you have a position bias, right? So directionally you have a bias. Now, if I'm going to be long something, I need to know long term it's going up, right? I don't want to be long something that long term is going down, right? Because then I might get some volatile moves, but then if the larger entities, as we like to say in the market profile world, the other time frame, if they step in and they push the market lower, which will be the dominant macro direction, then I could be out very, very quickly within a short space of time, right? So again, this is why we want to trade in the direction of the trend, and there's definitely ways we can do that, and there are definitely ideas and techniques that we can use to do that more consistently. So building the macro structure is so important. So I've already done that, and I have a free Discord server that you should probably check out at this stage, but I also run a series of courses on market profile, and you should check them out too, right? Because again, there are no excuses, right? Most of this stuff is, I'm giving it away for free. A lot of it is inexpensive, and I'm sure a lot of you guys have lost tons and tons and tons of money on trading. A lot of you are watching this, and some of you haven't, but some of you have. And the reality of it is that you can't keep going down the same tunnel, right? So with all my background in both the institutional and retail spaces, I can safely tell you that if you keep doing the same things over and over again, you will not get a different result. So anyway, I was long the Aussie, so a little bit out on that one. So in line with my risk management rules, I was scaled out of that one, and now I've got exposure via a different asset class. Right, so let's take a look at crude oil. Value trade. Been saying this, right? So I'm long crude at the moment. I got that really early as we dipped back into value, as I've always said, and we're going up, right? So it's setting up for value trade. And again, a good opportunity would have been to add to this one and get a quick swing through, right? So again, just a nice little run here, and I'm pretty sure we're going to cut through. And when we think about the natural range of crude, we could get a big extension even today, right? And now let's say that doesn't happen and we settle, then we're going to probably open the week and start to break upwards. The next target will be targeting the next value. Right now, of course, we're going up, so watch out for fades. We run into an offer stack, right? We could get faded downwards against the week, but again, I do think that we've gone into a very bullish setup in crude, and we're going to start to make for the upside. So for me, I'm staying in this one. It's a really good one, and of course, you can see my P&L flashed up on my screen. S&P 500, I was bullish on this one. I was structurally bullish on the S&P. I have a long position on the S&P, and this is what I was saying to you guys. Last week, we traded, we hit the value highs, we pulled out of that, and that diluted a lot of traders. And if you look here, we had an inefficiency, so we filled the gap, and then we took in some responsive buying. So immediately for me, I can see the bullish framework against the macro. It meant a big extension. In fact, the way we are positioned right now, we might keep extending for the next couple of weeks until we might touch out 4,400 with the S&P. Now we're at the critical level. We're not seeing sellers. If we look historically, I mean, these lines here take us all the way back quite a few weeks. This is a weekly profile, and we are trading the range of the S&P typically, which we would expect in a week. We have a gap in value, so we do expect that's going to get filled at some point, similar to what we saw with the bearish move here to take out the inefficiency, and then we met buying, right? We have a bid stack here. So again, my thesis was that either these shorts here are traps and we're going to get a washout. That's usually margin calls, and you now start to see this market extend, right? So we're now structurally, we've broken a high and we're moving up, right? And we can see the bid stack now, so we know this was solid buying, trap shorts, and now they're having to get up. Now we also can look, and I did say if we did break lower, I would look to buy the support. Worst case scenario, we're going to trade 3990, but it wasn't where I was looking. I wanted to be structurally, I'm structurally bullish, so I wanted to be long on the profile, and I needed a good place to do it. So the moment we pulled back, I did say to you guys, it's a buy the dip story, and then you want to push for the upside. So this position is doing quite well. Gold, we're now trading value low, so now this is looking like a serious opportunity. The thing with gold is that I'm expecting we got a gap to the downside, so I'm expecting we go down all the way to 1800 an ounce. It is a possibility. So again, how would we trade this? Well, we got a gap in value here, so some inefficiency. We are structurally bullish on gold, so if we are going to trade this to the downside, we need to see something that changes that view, that perspective. And for me, we need to take out these lows, right? And if we do, and what would I want to see? I would like to see some balance extension, balance breaking into new value. Then I start to think that we're going to take the gap. But I first want to see the upside inefficiency, otherwise we're going to get that volatility. We do have offer stacks developing. We have a responsive sellout in P period and in S period, so there's a good case for the downside, right? But structurally I'm bullish, so I'm looking for opportunities that are going to show me that there's an opportunity here to maybe do a value trade, which is what I would look for, because again, we have trade to extreme lows, and if we start taking in upside movement from here, I'd want to be long. Okay, so it's a great buy the dip story. If you're feeling a little risky, again, not financial advice, guys, if you're feeling a little risky, then this would have been a good this would have been a good buy level, right? So that 1950s an ounce, get long there and then see what happens, right? Again, it's a low risk opportunity if we go back to the upside. I'm convinced that we're going to start seeing some upward movement now in gold. I do think that we're going to strengthen. So gold and the yen have been the dogs of the week. The dollar has really outperformed against them, but every other asset has managed to hold strong. So it doesn't bode well for the dollar. So gold is undervalued relative to the other asset classes. So it becomes a great buy opportunity for me, right? But I'm not getting long this because again of what I'm trying to say to you is that I would like to see us build and start to take value. We're at a high, right? We've just tested that 2k an ounce. I won't be surprised to see us break lower. So I'm a little bit more cautious on gold, I'm afraid. Cable, I've structurally bullish on this one. It's been a little bit volatile. Once again, this is just about being bold. We got a gap in value here. If we start to develop next week, it becomes a great long opportunity. So definitely I would look to position long on sterling coming into next week. So it looks like a great opportunity. Always be mindful of inefficiencies. We do have an offer stack, so we've drilled it down. I won't be surprised to see us trade 2609 again. Dollar yen, structurally bullish. Did say that we're quite strong. We do have a gap in value, so do expect us to fall off this ledge pretty damn quickly, right? So again, when we see these inefficiencies, we want to wait and see what the market's going to offer. So for example, if we're pushing up and we start to turn tail next week and then start to act like we're trading value, I'd make the natural assumption that we're going to see some dollar weakness, and it's going to be quite impactful. Dollar CAD, I'm bearish on this one. Have a short position on dollar CAD. Sadly, we're still just jumping about. Again, we need to see a solid break to the downside and then lower prices, right? But again, I'm expecting that dollar weakness, so I'm sure we'll see it next week. Structurally, I'm bearish on the dollar versus the Canadian, so as a consequence, I would look for opportunities that will take us short. This is a Friday, guys, so this is just a round off now of everything that we've experienced in the week. Bitcoin, again, I did say to you guys that structurally I'm bullish on Bitcoin, but we need to go lower. Again, we're building up here. What I would like to see next week is a track back and we wash out the sellers. These are late shorts, so if we break them, boom, we're going higher and there's a lot of value to trade, and I think it's a great opportunity to be long Bitcoin. We do have a responsive buyer in J. However, if we start to track back lower, take out the J period print, I'd look for a buy opportunity at roughly about 25k, right? 24 between 24-25 range, right? So just at the bid stack, and then see if we can get a rebound. I'm pretty sure it becomes a nice little opportunity. Now, because Bitcoin is volatile, I'm always very cautious about how I play this. Sterling yen, structurally bullish on this one. Like I said, the yen is the dog of the whole thing. It's getting beaten, and I do think that we're going to get more extension with sterling yen. So again, if we pull back next week at any opportunity, it's a buy the dip story for me. Right, so I am expecting dollar yen to get accelerated to the downside. I think we have somewhat of a gap here. It's unfilled, so again, on that track back, we can expect us to be back at 167. So we need to keep an eye out for the opportunity, but not before we take out the upside, I think. So I still remain quite bullish. The Kiwi, again, gap filled. This was an easy trade. Even though we were tracking back a little bit, it was looking a little bit heavy. Maybe you needed a cut to lighten the load, but again, we're going up. up much, much higher, right? So we're actually going back, we're tracking that value trade to the upside. So again, great opportunity if you took my viewpoint and went long. We can see the bid stack here, we can see the structure. In fact, even when we pulled back aggressively, this became a serious buy opportunity. And if you look at my previous videos, for those of you guys who've been on the channel for a while, you know what I'm talking about. For those of you who are new, check out some of the videos I've got, right? See what I said about it. So again, the point of this channel is to make sure that I'm showing you as much as possible so that you can start to understand how you can take the edge back in this market. Look, I say this time and time again, these markets were not designed for you to win. You're not designed for you to make money, right? No, that's not the idea. The idea is for the people making the market to make all the money. However, you're the other side of that trade. You're not supposed to make money, so you need to start thinking like the market makers. You need to start seeing where those statistical edges lie. Obviously, when this market was pulling lower, right? Think about this. We got a responsive seller end period. Who could that be? Market's going short, right? As the market's going down, you know, it's getting pressed lower. People are getting the market makers are getting long because everyone's getting short, and then it reaches a point, right? You know, they're just too short. So there needs to be a reversal, right? So everything's gone down, right? We're building, and you know, and then we get a boom, a tick up. Why do you think that's happening? They can only be, if the market's going down, they're making money, right? So they can only be short for so long before they have to cover and take profits, right? So as this market goes down, the most traders are long, right? The market makers are all short, they're making money. And as it reaches a low, they need to cover those shorts, and it starts going up, and they're long, they're making money, and everyone else is short, right? And that's why we get the build-ups, right? Because that's the indication that people are heavy in one direction, right? And as they get heavy, depending on the direction the market moves, tells you that these traders are long, and they're going to go down, 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 and their stops are going to trigger, right? So they're going to get stopped out of their trades because they're long here, and they got their sell stops down here, hits those sell stops, they sell to someone becomes a buyer, right? Market goes up. So it's not incredibly complicated to understand the dynamics of liquidity. We just have to be open to the principle that whenever a market is heading in a specific direction, it's the small minority of people that are making all the money. And that means that we need to start thinking, okay, if all these people are making money, where are they going to cover? What's their overall objective? Are they going to keep pressing lower? And the moment you see them covering, right, and you start to see that additional volume coming in after a big drop, then you have to brace yourself now for what is a pending reversal, right? And then there's certain setups that you're looking for on your profile that tell you that the reversal's underway, and they're all based on statistical benchmarks. Anyway, awesome stuff, guys. I hope you enjoyed the video. Once again, like, subscribe. We're building something here. We want traders to know, we want people who are coming into business to know what they should be looking at and where they should be going. And again, I have a lot of support and resources to do that. But till my next video, guys, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?